Welcome back to Thailand Chit Chat. Today we have a special episode to do with finance for Thailand tax residents. We're going to be talking about this new regulation, which is going to be coming in on January 1st, and that will be covering, basically how we see it. And I'll explain what's in present and what's after. After that, we'll be talking about where you should be in looking at your investing your money. Should you be bringing money into Thailand? What sort of vehicles there are? What alternative vehicles? And it's going to be a short episode, but hopefully it'll be punchy enough and it gives you some knowledge. So, Craig.
Hi.
Let's get your opinion on things. So I'll give a quick brief of what this is, putting on my glasses. One of my mates hates me putting on my glasses during the show, but tough. Anyhow, so Bangkok Post has sent out certain information out on this, and Grant Thornton and other organisations have sent out some advice on this. But basically what it is at the present time, Thai tax residents, basically anyone that's living here for more than 180 days, are subject to income tax on foreign sourced income, only if such income was transferred to Thailand within the same calendar year in which it was earned. In other words, foreign sourced income remains non-taxable if it was brought into Thailand in the following calendar year. So that is the present situation. The change as of January 1st is Thai tax residents with foreign sourced income will be subject to taxation in Thailand regardless of the timing of remittance of such income into the country. So it's not to do with the present or a future calendar year of when you actually had these earnings. It's important to note that this rule exclusively applies to Thai tax residents. If the income has been received in another country and later within the same tax year is being transferred to the taxpayer's account in Thailand, it must be taxed in Thailand. If Thailand has a double tax agreement with the country, like UK has, and there is a list available of where Thailand has a double taxation agreement, where the money comes from, the tax paid in that foreign country can be deducted in Thailand according to the rules in the double taxation agreement. Now, there's a whole lot of details. There's obviously grey areas. One is, how are you supposed to prove that? And are you supposed to give tax returns for that particular point of income? From if you're from the UK, what happens if you're living in Thailand and you paid like stocks and shares, when you get your money, you're taxed at source, and you're supposed to claim that back from the
Correct.
UK. How does that work? So there's a whole lot of grey areas in there, which is always scary in Thailand because next thing you know, they say, oh, what we meant by it was this. And then there's a transfer of that knowledge to the people that are going to be taxing you and what the implications are of that. So
Absolutely.
What's your opinion on this?
Again, I've not, done any sort of thorough research myself. And again, as you mentioned before, I certainly plan prior to the beginning of next year to speaking to someone at a BDO or a Grant Thornton or someone that, can give a very valued opinion on number one, the law in itself and how it's going to be implemented, or indeed, who it's going to affect. I mean, the trigger for this on a sort of global financial world issue is to do with Thailand signing up to what we call CRS, which is Common Reporting Standards. Now, lots of other countries in the world, if you lived in Spain and you had income in the UK, as you say, you would have these types of agreements in place where effectively you are always taxable in Spain, but it doesn't mean you will pay tax because, as you say, of things like double tax agreements. And every country has a double tax agreement. Well, not every country has one with everyone, but there are always double tax agreements in place between two countries. So I think, the Thai rule before, whereby, as you say, effectively you could, earn it in a previous calendar year and bring it in, which would never really be proved if you had savings. Of course, they could have been from however long ago. Moving to this model, it's number one, it's going to take a lot of policing and how that is policed with everyday people. I'm not so sure. I mean, obviously, those of us like myself and Andrew that work here, and we do pay some tax as well. Although, of course, sometimes We might need to bring money in from before, which if we want to invest, we want to buy a property or whatever it might be. I don't know how that sits, if they're going to try.
Pensions as well.
This is the other thing I was going to come to. I mean, what you and I obviously we sit in this world where we have tax identification numbers because we're employed and we work here, so we're in the system. I mean, people who are retired don't even have that. So how on earth they're going to be able to figure out, what the someone without a tax identification number is, or if they start trying to ensure that the pensioners and retirees do have a tax identification number, I think that's going to be quite scary.
It also comes down to people with retirement visas who have to prove so much money's coming in per month, or they have a lump sum sitting in a bank account here. And you have to, even as a marriage visa, you got to have 400,000 baht in your bank 3 months prior to your renewal, and the same, but for 800,000 for retirement. So then you have to prove that. So would that because you have to give statements when you're renewing, bank statements and things like that, from your Thai account, show the money has come in, would that affect visa? So a lot of people are very nervous about it, and I think when they're doing this, maybe they should have this all planned up front before they start making these announcements. I mean, January 1st is not far away. Yeah,
correct. I mean, it's interesting you talk about the visas. I mean, one in particular visa, and again, I'm no expert in this field, but from conversations I've had, is this new long-term residence visa, which only needs to be renewed every 5 years, but it's attracting the higher net worths, whereby you got to have $1 million of assets and $80,000 of annual income. Now, I think, those sort of people could potentially be vulnerable because they're signing up and saying, oh, we've got $80,000 of income. And actually, I was thinking to myself when they said that and they brought this option in, then that might be a way to try to sort of, capture tax on your worldwide income, which a lot of countries do, as in the UK, you are taxable on your worldwide income. Of course, it doesn't mean you pay tax on your worldwide income because you can't get taxed twice. But at the same time, you are taxable on it. And Thailand is simply just trying to play catch up with this. And as I say, the example with
it's not necessarily, just to make this clear. People say, "Oh, they're trying to get the foreigners again." It's not. This is for Thai, as well.
This is the feedback I'm getting. Yeah, I mean, the feedback I'm getting is, and as you say, certainly, foreigners who are retired. I mean, as you say, they sit outside of the tax system anyway because they don't have a TIN. They don't have a tax identification number. So I mean, that's a whole new aspect trying to bring that in. But I think, the questions I've asked. It's about the Thais who are making significant monies, the sort of hundreds of thousands or the millions of dollars, bringing that money in that's going to make the difference to somebody who's, sitting back on their $3,000 or $4,000, a month pension.
Yeah, so, that actually, there's also Thailand's bringing in inheritance laws. And everyone got a little bit scared about that. But when they talk about inheritance laws, they're talking about people who paying inheritance for just hundreds of millions of baht, and that's how it hits them, not the person who's retiring on maybe 10, 15 million, which is a fair amount for most Thais. But they're targeting that. Which in some ways is all to do with redistribution of income. This policy.
It's systems, isn't it, that have been talked about in the Western world for a long time.
Well, employ an accountant, employ a lawyer to find some way around it.
Exactly, and again, I can only have a view on this whether it's sustainable. As far as the people that have the big money still have a lot of power within the system that we live under, and. Is it going to rattle them so much that they change as quick? I don't know is the answer. And we'll have to see.
None of us know.
From my point of view, as I say, I will definitely take advice on it. Prior to the 1st of January, get something in writing from my lawyer or from one of my, sort of an accountant or someone who can advise, on that. But I'm not going to really worry about it straight away. I think
you'll come back on and give us an update. Yeah,
for sure. Yeah, I mean, once I find out a bit more, and there are a handful of companies doing seminars on this type of thing. I've seen, and I'll probably go and sit in a couple myself. But I mean, I've been in this business, a long time, 25 years, and come from the sort of Jersey background. And there's often, as you say, these changes in legislation, even within the sort of UK and other systems, more developed systems. And sometimes you'll get a situation where, you'll have two identical situations. Advice will be asked from two professional organisations, and you get completely different advice. So and then Thailand, as we pointed out earlier, often the interpretation is the key. It's the greyness is there because it can be interpreted in different ways. So yeah, a long way to go, and we shall see. But I would imagine my first thoughts are certainly in the next 12 to 18 months. Any retirees, certainly for one, need to worry about sort of double tax agreements and this, that, and the other, or us foreigners who are maybe earning some money overseas and some money in Thailand and bringing some in a fairly modest amount. So I can't see it becoming an issue. And of course, if it becomes taxable, it becomes taxable, doesn't it? I think the rates are between 20 and 35%, and if it's found that you're taxable on the money, then I guess you just got to pay it.
Yeah. Okay. Quick fire question. Should I bring overseas money into Thailand now due to the exchange rates, or should I hang on? Depends on the currency, obviously.
Yeah, my crystal ball's in the car there, so I just... But, I mean, exchange rates, one of the important things about exchange rates are always that, especially if you're retired here, is to have income streams in different exchange rates for that exact reason. Should you bring money in? If you're watching this right now and you own US dollars, the US dollar is very strong. So quite possibly the answer is yes. Against the sterling and against the euro, obviously it's less strong, right? And the Japanese yen is another one which is less strong in the bigger scheme of things when you look at trends over the years. Thai baht is probably about where it should be in terms of its strength or weakness. So I certainly don't think that bringing large amounts of money and taking a chance on a particular rate going up or down is the way to go, unless you've got it in your head. If you've got a plan in your head and you say, okay, I'm going to need to do, let's say you've got a condo to buy or something like that, and you've got it in your head that you want to spend X amount of pounds, and for ease of reference, if that's £46,000, you wait till it's 46, you go and you buy at that,
right?
And then you set that target because in your own head that's your cost in your base currency. Yeah, something like that works well. And then you're not going to be overly bothered if it goes to 47. Right. Obviously, emotions get involved with any investing, and everything about to be successful in investing is to take emotions out of it. And this is a similar thing. You can say to yourself, right, okay, and you can do contracts for this sort of thing, what they call forward contracts, where if something goes to a certain amount and you need to bring a lot of money in, you agree to buy it at that amount. Great, you've chosen that amount. Therefore, you're happy, right? The fact that the exchange rate actually gets better afterwards shouldn't bother you. It's like I always compare it to the plane ticket. I can be happy that I've paid £450 for my plane ticket back to the UK. I'm sat next to you, and you've told me you've paid £400. Am I frustrated? Am I annoyed? I shouldn't be, because I was happy that I paid $450. And I think that's the emotion that needs to be used with exchange rates. So no one knows what's going to happen in the future, but longer term, if you're living here and you're retired, or even if you're not retired, if your business allows it, generating revenue in multi currencies always provides you with a safety hedge, if you like.
Should I sell my shares now or hang on? Because the markets are rather depressed and worried because of Israel and
geopolitical events such as what's the terrible situation that's been happening in Israel actually generally don't have much of an effect on markets long term. It's about strengths of companies, strength of economies, which decide whether or not markets are going to go up or indeed going to go down. And again, similar to the currencies, obviously no one's got a crystal ball. My view was very much that because we had a nice little recovery, and I'd rather talk about global markets than the UK specifically, because the UK market, the FTSE, for instance, is very kind of weighted in oil and banks, so therefore, if we talk about sort of global, the S&P 500, for instance, would be more of a marker for me. We had a nice, uplift in the first half of this year, and my feeling was that the things would remain fairly stagnant for the rest of the year, and that's where we are at the end of October. Whether we'll be there at the end of December, I don't know for sure. But as far as people asking questions about, you know, selling and buying, that's always down to their personal situation. You know, shares and your exposure to them and your you know, your risk tolerance is always dictated by your time horizon. You know, when are you going to need that money? You know, if you need that money in a month's time and yourself or your advisor has got you invested all on equities, then he's definitely not doing his job right. You know, if you need that money in 10 years' time, then that's absolutely fine. So again, it's very sort of time and individual specific as to where the markets are. And of course, you know, something like shares over time, invariably you will get growth out of them, and in some cases you will get income and dividends. So therefore, you know, you need to have them in your portfolio. But if you sell them, the key is, you know, what do you do with the monies then? If you don't need the money to spend, you need to find somewhere else to put it to get a bit of a return. I mean, okay, now for the first time in, you know, decades really, or over a decade, I think, pretty much since the financial crisis, you know, we're starting to see, you know, interest getting paid on cash. You know, there are some fixed deposits out there where you can get sort of 4 or 5%, which is fine for a lot of people. You know, it matches
still below
inflation.
well, it doesn't match.
Here, I think maybe we're about
6% is 6% in Thailand.
Is it 6? Well, I mean, as I say, you maybe nearly match it. You know, certainly the US has, you know, sort of come down. Yes, the UK is still in high levels of inflation. But for us living here, you know, if you are getting sort of 5% in cash on a fixed deposit, you know, couple that with a possibly slightly undervalued sterling, so you'd hope to get, you know, a bit more return over time, then you might match inflation for sure. But
that's in Thai baht.
Yeah, if you're talking about, well, you're talking about obviously earning the money in sterling. The potential, in my view, for sterling to possibly increase against Thai baht a little bit. So the uptick you get on that, plus the 5% you'll make in real interest returns, you know, allows you to match inflation here. Okay,
so looking at alternative vehicles where you can get higher interest rate, which means higher risk as well associated with that. Yeah, is that something people should be looking at? Or as you say, I think to answer the question, it depends when you want the money and how much risk you're prepared to take to get the return.
Precisely. I mean, certainly having, you know, we talked before briefly about shares and stock markets, and as we know, they go up and they go down. Having investments in areas which have no correlation with the stock market, I think is important in building, you know, a long-term, you know, sustainable growth portfolio. Now, whether that alternative is property, whether it's, you know, private equity, whether it's, you know, loan notes and sort of this type of thing is all something to look at on a case-by-case scenario. As you say, it's down to the individual's risk tolerance. From our point of view, where we work, you know, we've got to be very, very cautious of people that are coming looking for funding for projects, you know, whether they're going to be successful. I mean, I would say probably out of 10 people that come knocking on the door looking to raise finance, you even talk to one maybe, you know, because you know it's a dangerous game sometimes with alternative investments, but they are out there. The opportunities are out there with companies with good track records. You know, you can use third party independent companies to do like credit checks on these businesses. You know, if you have things like independent verification through, you know, accounts that have been you know, registered with companies like UK companies, that type of thing. All this type of thing is important to understanding, you know, the provenance of the business that you're investing in if you're going down the alternative route. So you need to be sort of conscious of that.
Okay, so if you're looking at basically getting security and higher return, it doesn't exist.
I mean, it's
because it used to be bonds. It was it wasn't a high return, but it was a steady return. But bonds in themselves change.
Correct. Yeah. I mean, you know, the bond market and the cash fixed interest market, there was always a strong correlation there. I mean, you know, which makes sense. You don't need to be a Nobel Prize winning economist to work out that, you know, if the value of cash, if interest is you're getting more on cash at 5%, then, you know, buying a bond that pays 5%, is clearly going to have a lower cost, than it would do when you were getting 2% on cash in the bank. So, I mean, managing your finances through, listed bonds with companies like, Coca-Cola or whatever it might be, used to be quite a good way to do things. But as you say, number one, the bond market hasn't followed the same trends it used to follow, and there's been just as much volatility in the capital value of that over the years. And also now it's more and more difficult with the bonds with big companies to buy in at smaller denominations. Usually you're looking at £100,000 or $100,000 minimum, which for most people is a lot of money to put into one particular investment, which is why you'd use bond fund managers. And again, this comes into a whole different world.
There's a fees attached to that as well, and
of course there is, and obviously funds, offer diversification, which lowers your risk, and like you mentioned before with the alternatives, of course there's good fund managers out there, and there's others which haven't done such a good job, and it's a wide and varied world. But, and I know it's a bit cliched, but of course having diversification is key. But also, understanding what you own is probably the most important. I mean, my favourite saying is by a guy called Peter Lynch, which says, know what you own and know why you own it. And I think that's probably the key to successful buying is knowing what you own and why you own it. And if you are working with someone who you trust and you think they understand it, that's the next best thing.
Right. Okay, so that was just a quick, I wouldn't say in-depth, general conversation on what's happening in finance. I hope you found it useful. We've got other videos coming up. Please subscribe, and also if there's anything particular you would like us to find out, discuss, or maybe find someone to interview about that topic, just let us know, and we'll do our best to meet your requirements. Okay, thank you very much again.
Thanks a lot.
And speak to you later.
Cheers, bye.